Hey guys, welcome back. In this video, we are talking about the infinite squeeze, why shorts need to buy, market makers collapsing, and many more in this video. First, we're taking a look at this. Find me a company under 600 million market cap that is not going bankrupt and has a path to nearly 5 billion in revenue. Oh wait, it does not exist, yet people still keep pretending AMC is just another stock. And we've always said about this in terms of right now, one of the biggest reasons for not just apes, but why institutions and other investors who want to buy into AMC is because they realize the opportunity. When you take a look at where AMC is at and you compare it with the fundamentals, you know how much it should be worth. You know that with true price discovery, with understanding of fundamentals, AMC is extremely undervalued. And so this is why at this current rate, we have always said that the reason why people are attracted to AMC, the reason why we're seeing people outside of the ape community buying into AMC is because of factors like this. This is the very simple definition of the value of the potential of AMC, and people are obviously realizing this. And when you take a look at the box office, we can see that it's up year on year 14.2%. And so this is what we've said with as well. When you take a look at AMC, firstly, we know their path. Secondly, the industry in which they are in is also an industry that is still continuously growing. And so this pairs up with one another, and this already tells you where AMC is obviously projected to, how well AMC is going to do. And you have to remember, AMC are utilizing other areas to also benefit themselves. We talked about selling popcorn, we talked about selling others, and that itself is also beneficial for AMC and it's not dependent on the box office. And now this is what we said with why AMC is going to do well and why institutions and investors are outside the ape community all think AMC is undervalued and are trying to buy as much as possible. Now, there will be people talking negatively about AMC because of the fact that AMC were at a net loss due to interest payment from loans taken out to keep them afloat during the pandemic. And ultimately, you got to remember this. Had AMC not done this, they would have been bankrupt, the short sellers would have won. But it's precisely because they kept themselves alive that the short sellers are trapped, that we're still in for this whole opportunity of the AMC squeeze. Now, what you have to further realize is that that's over. They've already paid down over $2 billion in debt. New refinancing is helping AMC reduce their interest rate. Over $500 million in interest will turn into net profit at the current box office numbers. As more movies are slated for 2026 and 2027, AMC will be cash flow positive in a big way. And this is what we've said with earlier as well, with how firstly, look at where AMC is as a market cap, look at their revenue. Secondly, we talked about the box office, and you understand why that's very important right now. And you will understand how AMC's fundamentals is only going to get better and better. That's going to improve, and the books will look even better than it is now. And people are waking up to this. People are seeing this, not just the apes. The apes have known this for a very long time, but I'm talking about institutions. I'm talking about investors who want to look for that golden investment, investors who want to be recession proofed. They are all looking for not only a stock that will not decline during a market crash, but actually shine amongst those. And AMC is looking to be one of them. And it's why they are viewing AMC as the safe haven investment. And the very fact that AMC is doing things like this, even without a recession, even without anything else, just the fact that they are improving fundamentally, that's already what's attracting them. Now, the things that we are, of course, facing isn't AMC's problem. It isn't AMC doing bad. It isn't the box office doing bad. It's the suppression. Let me get this straight. It's basically impossible for AMC to have a green day and go up in value. The reason that AMC's theater is selling shares and everyone buying and selling always agree upon a lower daily closing price. So this is obviously the sarcasm talking about how when you take a look at what's happening for AMC, everyone is continuously buying and buying and buying. And suddenly we're still seeing the price going down. And you have to realize that under normal circumstances, people who are continuously buying the share of a stock, that price will only go up and not go down. And that should be the case for AMC as well. But the very fact we don't see that is because we understand what the suppression is. And this is what we said with no more talk of a short squeeze. It's an infinity squeeze. An infinity squeeze is an extreme short squeeze scenario where heavily shorted shares become nearly impossible to cover, theoretically creating infinite price appreciation and losses. And when you take a look at AMC, we already know that there are more synthetic shares of AMC than GME. Now, at the end of the day, it isn't a contest, but the reason why we talk about this is because we've said that because the price of AMC is lower to that of GME, it's easier to create synthetics because at the same cost, you are able to obviously create more synthetics of AMC than you are of GME. This is just very basic understanding of mathematics. But because of that, is what we've said, the more synthetics that they create, the more short synthetics that they create, the more they have to cover. And when it becomes too much, where there are too many shares to cover and it becomes impossible to cover, the price will only go up higher and higher and higher because they will have to get rid of all of these positions, but they won't be able to. And this is what we said with an infinite squeeze, is why we've said that the potential for AMC is way bigger than that of others because there are more synthetics created for AMC. And you have to realize, in order for shorts to close their positions on AMC, they need someone to sell into their buys. Since retail is buying stock and holding for 5 years straight, the counterparty selling the stock for 5 years is short. No dilution supersedes 5 years of short selling. So then multiple things to talk about here. Firstly, just what we've said. Firstly, infinite squeeze. And this talks about how they're creating synthetic shares every single day. You have to remember, they've been doing this now for 5 years. Because that's how long apes have been buying. And this is what we've said with how when apes buy into shares, yes, it hits the dark pool. Yes, we're getting manipulated and we're not seeing the price going up. But remember, we are forcing them to be creating synthetic shares that when it squeezes, is only going to yield us a bigger return. But it's also talking about the fact that they have been rehypothecating and creating synthetic shares for 5 years now. Yes, AMC has been offering shares. Yes, AMC has been doing dilution. But we've talked about this. There is very likely 20 billion plus shares of AMC that exist out there. Even if AMC were to offer 1 billion shares to a short seller, that will still mean that there are still 19 billion shares of AMC short out there. So we have to realize that dilution isn't going to help these short sellers if we're using the data that we've seen. And this is ultimately what we have to understand. And you can even see here why shorts are stuck and why we know they're stuck. Look at what they've been doing every single day. You're seeing the barcoding of AMC. You're seeing the off exchange at an extremely high number. And this is just very normal things for AMC now. But remember, it shouldn't be normal for any stock whatsoever. The very fact that it happens to AMC is just a showcase of what's going on. It's just a showcase of the manipulation, the suppression, but more importantly, how these short sellers are, of course, stuck in this play. You can also see from the FTDs, 1.6 million FTDs turned into 6.7 million FTDs, and a run from high 2s to 13 in 2 days. And this is just another showcase. On top of the existing barcoding on an 81% dark pool and higher, we're seeing the FTDs increase like that. On top of this, we're seeing ETFs that are being used to short AMC also going on the threshold, the red show list. This is just another case of suppression, manipulation, and is why we understand that the shorts are in fact in need of shares. And so a lot of people who have said that, dilution has helped out the short sellers, has allowed them to get out. If they truly have gotten out with these diluted shares, we wouldn't be seeing this. We wouldn't be seeing this. And that's what you have to understand. The short only way out is bankruptcy. We buy, we hold, we improve fundamentals, we win. And it's why we've said that earlier, the reason why we see everything here, the reason why we talked about the interest payment is because had AMC not done that, then we would have faced bankruptcy. Then the shorts would have won. But it's precisely because we survived that and we're still alive that the short sellers are still stuck and have to pay us. And on top of everything that we talked about, remember, Universal is extending their theatrical windows for all of their films, which means that they will get a minimum of 5 weeks exclusivity, which will be increased to 7 weekends in January of 2027. And this is something that we've said is big because firstly, it shows they understand how well theater industry do. Remember, if it's not making them money, they wouldn't be doing things like this. It's precisely because they know that the market is getting bigger now. People are more willing to go into the theater to watch this, that they are willing to be doing things in terms of increasing their theatrical windows. Furthermore, this is also showing how it's a shift from the streaming service into AMC, into theater, and is why we're seeing companies like Netflix who wants to partner with AMC. These are all things that are just showcasing how AMC is only going to get bigger and bigger. And on top of the borrowing, the FTDs, you can see 1.9 million shares already borrowed against a 109 stock. And it's why we've said that FTDs increasing is just a showcase of people who wants to borrow shares. And this is just an example of it as we see the shares availability of AMC. And you truly have to understand why that's extremely important. Now, you also have to see that AMC is now a micro cap with 5 billion plus revenue potential, backed by a CEO with proven turnaround records, no insider selling in 3 years, with 45 months of cash runway, trading 99% below historical prices to sales. This is just a very definitive point of how undervalued AMC is, about why people want to buy AMC, about why institutions realized everything there is about AMC. And so I think we have to realize by now that this is the biggest reasons of why people are attracted. Now, you have to remember another thing as well. The shorts don't need you to sell at this point. They're just trying to run out the clock for everyone who forgot they had stock. Log into every account you have had with stock of AMC and GME. Now, this isn't something that potentially they are doing, but because this exists, I want to talk about it because it wouldn't surprise me if brokers would try and help out the market makers. Essentially, there's a scenario where a brokerage can liquidate securities due to prolonged inactivity if the account is deemed to be abandoned/unclaimed under state law. Now, we've already seen in the past with how brokers have helped out market makers. And so, just like earlier, we've said that the shorts want us to sell because they need to buy. And so if we're not selling manually, then they could be forcing some brokerages to liquidate these securities. And like I've said, under normal circumstances, you can't. But there is scenarios where they could potentially do this, which is long-term inactivity. And so even if it's just a quick few seconds, pop onto your account, take a look at this. I'm not saying that this is something that they're doing right now, nor is it something that they're trying to do. But the very fact that it is a possibility, I want to quickly mention it to other people. And thank you to Brandon H for saying this as well. Now, I guarantee if everyone in AMC and GME went to their brokers and demanded their shares via direct registration, also called DRS, all at the same time, your brokers would not have your shares. This is something we've talked about many times before. And this is something we've seen with other stocks like MMTRP, where the brokers did not have enough shares to cover all of the shares they've given out to their actual clients. And the same would apply to AMC and GME as well. It's just that we are seeing how these brokers are finding other ways, is why you're seeing these tokens, is why you're seeing everything else. That is the biggest reasons for why this is happening. Furthermore, we saw that IMAX reached a new high a few weeks ago. AMC has the most IMAX screens. And this is an example of where AMC should be. You can see IMAX 58% return in the past year. This should be the same for AMC as well, but yet it's not because of the manipulation, because of the suppression. Also, another thing to look at right now for GME is how much cash they have on hand. And we talked about how this cash on hand is going to allow them to do multiple things that will be beneficial, wherever that's with a massive acquisition or, of course, others, like we've said. And so this is something to keep a close eye to as well. A big thing I want to talk about is that Morgan Stanley and Clearwater are close to collapse. Now, we are seeing many things happening right now. And the reason for this is obviously because of the trillions of derivatives that they have. When you take a look at some of the top banks, JP Morgan, Goldman Sachs, Citibank, look at how much derivative positions they have, $63 trillion. This is what we need to be talking about how big this is. And it's why we've said things like this earlier about why it obviously matters. As always, on this financial advice, I do take advice on yourself, make sure you do your own due diligence and research, and I'll catch you guys next time.